Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer to our readers, and they get delivered to your inbox. Energy stocks were the biggest winners in 2021 and 2022. And while 2023 started out as a slow year for oil and gas, crude oil prices have been climbing higher since June on the heels of record demand, OPEC production cuts, and more recently, geopolitical tensions in the Middle East. Currently trading at $84 per barrel, the U.S. Energy Information Administration, or EIA for short, predicts Brent crude will average about $95 per barrel in 2024. That bullish call is great news for today's income pick. Plains All American Pipelines LP, traded on New York Stock Exchange under symbol PAA. John?
Thanks again, Mo. Plains All American is one of the largest independent midstream energy companies in North America, and it provides logistics services for crude oil, natural gas liquids, and natural gas in both the U.S. and Canada. On average, Plains All American handles more than 7 million barrels per day of crude and natural gas liquids through its North American network. The crude oil segment, which accounts for roughly, 80% of revenue, includes pipeline storage and terminaling in trucks. And its infrastructure, I'll just throw out a couple numbers or a few numbers, includes 140 million barrels of storage capacity, 4 marine facilities, 4 natural gas processing facilities, 2,100 trucks and trailers, 6,000 crude oil and natural gas liquid rail cars, and 18,300 miles of crude oil pipelines.
I was reading that second quarter net income jumped 44% and EPS growth was 45% at this company.
Yeah, for the second quarter ended June 30th, the Plains All American announced that net income advanced 44% year over year to $293 million. Net cash provided by operating activities was up 12% at $888 million. Plains All American generated second quarter free cash flow of $650 million, and that was down slightly from $688 million in the second quarter of 2022. And now commenting on the second quarter results, the company's CEO said, thanks to its strong results and growth opportunities, it expects to report 2023 EBITDA at the high end of guidance. It also expects to report robust free cash flow generation of approximately $1.6 billion, and to meaningful increased returns of capital to equity holders and further reducing its absolute debt.
Here's the exciting part for income investors. The company raised its distribution in the second quarter by 23%.
Yeah, All Plains America's strong, reliable free cash flow generation allows it to execute on its previously announced capital allocation framework, which is focused on increasing returns to unit holders and enhancing its financial flexibility. In October, it declared a third quarter distribution of 0.2675 per unit, or $1.07 per unit on an annual basis, for a yield of 6.87%. The payout represents a 23% increase over the 0.2175 paid out in the third quarter of 2022. It's also what it paid out in the second quarter of 2022. The distribution is safe. The payout ratio is just 59.88%. It actually has one of the most reliable high-yield dividends in the energy sector and targets multi-year sustainable growth. And its 6.8% dividend yield seriously outperforms every other sector in the S&P 500, which itself only provides or pays an average dividend of just 1.6%. And that growth is expected to continue with an expected 3-year forward compound annual growth rate of 12.4%. That's compared to 3.6% for other master limited partnerships.
And John, Plains All American's units are seriously thumping the S&P 500.
Yeah, strong industry dynamics have helped All Plains American units trend steadily higher, easily outperforming the broader market. As of this recording, Plains stock is up roughly 23% over the last 6 months, 40% year to date, and 42% over the last 12 months. Those are big gains, but more gains are expected, with Wall Street analysts providing a median 12-month share price target of $17 per share and high estimate of $20 per share. Now, the high estimate would put Plains All American units at their highest level since July 2019.
All right, John, thank you so much for analysis. Just to recap, Plains All American Pipeline LP is firing on all cylinders. It's reporting strong financial results, provided robust guidance, its share price is crushing the broader market, and it just raised its annual dividend by 23%. Permian Basin growth and strong global demand for North American energy bodes well for Plains All American, its unit and reliable ultra-high yield dividends. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.